So welcome back friends to KYEBYEWAY, where investing is decoded, simplified and maybe even fun. So in just 10 minutes we'll turn confusion into clarity. So let's get started. So friends, let's see how to quickly use PE ratio. All right. So imagine you want to buy a stock and you check its PE ratio, and here's how you should think about it. All right. So compare it with other companies. So let's say you're interested in two companies, one selling chocolates and the other selling biscuits. Both are in the food industry, let's say, okay? And if one has a very high PE compared to the other, it could simply mean people expect the chocolate company to grow much faster, right? So compare it with the market average, right? So sometimes the PE of a stock is compared with the market average, like the PE of the Nifty 50 in India, right? So if a company's PE is higher than the market average, it might be seen as expensive, and if it's lower, it might be cheap. Understood? Excellent. So friends, let's see the significance of PE ratio. So whenever you look at PE ratio, you should think of it as a temperature check for stocks, all right? Because it helps you with decision making, which means when deciding between two different stocks, the PE ratio can tell you which one might be better based on their current earnings. Okay, so let's say I'm just giving an example. This is not a recommendation. Let's say Infosys and TCS both are from IT sector, right? So depending on when you look at the PE ratio, you can compare which company is doing better as compared to their when compared to their current earnings. Okay, excellent. So now it also tells us a story of market sentiment, which means a high PE might show people are excited about a company's future, while a low PE might mean they're a little worried. Okay, excellent. Now it gives us an excellent investment strategy because some people prefer a high PE stock, some people prefer low PE. I mean, high PE stocks, people are I mean, there are two different kinds of investors, right? One is growth investor, others are value investors. Growth investors usually don't mind taking a little bit of a risk and paying a little more for high growth, so they prefer high PE stocks. Usually IT companies, I mean, just to give you an example, uh, always demands a higher PE, whereas value investors, they prefer low PE stocks because they want to pay less for each rupee of the company's earnings. Understood? Excellent. Now, a quick example, suppose a company has a stock price of, let's say, 100 rupees and the earnings per share is rupees 10. Its P ratio is 100 divided by 10. We saw this in the previous module, right? So its P ratio is 10. Now company B has a stock price of, let's say, 200 rupees and its earnings per share is also 10 rupees. So its P ratio is going to be 200 divided by 10, which is 20, right? So company B has a higher PE ratio, meaning people are willing to pay 20 rupees for every 1 rupee of earnings, while company A, they are only willing to pay rupees 10. So now you're able to understand the way how to compare between two different companies. Excellent. So friends, let's quickly see how Nifty's PE aligns with Nifty index. Okay, excellent. So now analyzing the historical Nifty PE, that is price to earnings, alongside the Nifty index can reveal a lot of interesting insights into market trends. All right, and not just that, it also helps us in investor sentiment, understanding investor sentiments, and also potential opportunities or risks that are involved. Right, let's just see, I mean, a simple breakdown of how the Nifty PE and Nifty chart interact and why it's important to understand their relationship. Right, so in short, what is Nifty PE? Nifty PE measures how much investors are willing to pay for each rupee of earnings from Nifty 50 companies. Understood? Earlier we were looking at P or ratio of a particular stock. Now we are going to try and see how we can understand P of an index. Great. Now, high PE means investors are paying more for each rupee of earnings, often because they expect a strong future growth. On the other hand, lower PE indicates investors are paying less, possibly due to lower growth expectations or higher risks. Understood? Brilliant. Now, always remember whenever we use, whenever we are talking about P ratio, we need to use only net profit. Okay? Because in the context of P ratio, earnings always refers to the net profit of the company, not the gross profit. Right? We've already seen what is net profit and gross profit in our previous parts. Kindly watch the first part, second part, and then come to this one. Otherwise, you will not understand what we are talking about. Okay? Great. Now, why use net profit for earnings in the PE ratio? This is because the PE ratio is designed to reflect the full profitability of the company, which is best represented by net profit and not the gross profit. Okay? Excellent. Now, net profit shows the total amount of money available to shareholders after all the obligations are met, which makes it the most relevant measure for evaluating a company's earnings per share and its valuation. Okay, great. So friends, now we are going to do something very interesting. Okay, so we are going to be looking at four different segment of businesses, and this data is as on 30th October 2024. We are going to look at the current market price, which is CMP, PE, which is price to earnings, EPS, which means earnings per share, and the industry PE, which is industry price to earnings. All right, excellent. Come, let's see how it looks. So here is the chart, friends. This is the first chart which talks about the IT companies. This talks about power companies, power generation and distribution companies. Now the third one talks about the banks. In this we have two different kinds. One is the public sector banks, right, which is like State Bank of India and Bank of Baroda, and the rest are all private banks, right? And then we also have the FMCG, which is fast moving consumer goods, right? Now let's quickly see the industry average of IT companies is almost the same, which is 33 PE, right? And now it becomes very easy for you to compare the individual company's PE with the industry PE and tell which is trading below the industry average and which is above the industry average, right? Similarly, even in power distribution, the industry average is, let's say, about 38 PE, price to earnings, and you can tell by looking at it the companies which are trading lower than the industry average versus the company that are trading way above the industry average. So this gives you a kind of, I'm not telling you this is the only way to find an undervalued or overvalued companies. This is one of the parameters that investors use. All right. Similarly, we also have these two banks, which are public sector banks, whose industry average is 9, and the private sector banks average is 10. Now you can tell which is trading above the industry average, right? And you can tell which is at par, almost at par, or which is undervalued, right? Or below. I wouldn't say undervalued, which is trading below the industry average, the PE, right? And the same way, the fourth one, which is FMCG companies, you can see the industry PE here and the company's individual PE and compare it with the industry PE and then see how it is placed when we compare it with the industry average, right? Now here we notice something very interesting, which is minus 3.62. What does this mean? Can a earnings per share be in minus? Let's quickly look out. But again, before we proceed, let me make it clear. This is not a stock recommendation. This is just for education purpose to understand the correlation between individual companies PE along with the industry PE. All right. Excellent. Now, what does negative earnings per share signify? So the negative earnings per share means that a company is losing money rather than making a profit. All right, so we saw in our previous example, one of the companies were making negative, they had a negative earnings per share, right? So this is what it exactly means. And EPS is calculated by dividing a company's net income or the profit by the number of outstanding shares of its stocks. So when the EPS is negative, it means that the net income is actually a net loss, right? And there is no earnings to share among the shareholders. So when you divide a negative number by a positive number or vice versa, the result is always negative, which we all know, right? Now, only when you divide two numbers of the same sign, both positive or both negative, do you get a positive result, right? This is basic mathematics, we all know, right? So, this is just a simple example that I've shown. So friends, what does negative EPS signify and why does it matter? Let's see. It shows the company isn't currently profitable, which could mean it's struggling to cover its expenses or grow its business. So it will tell you about the financial health of the company. Okay, number one. Number two, a negative EPS can make the stock a little less attractive to investors because it indicates that the company might not be able to provide returns in the near future, right? So it also impacts the investors' decision, right? Excellent. Now the third one is some companies, especially the new ones or those in the growth stages, may have negative EPS while they invest heavily to expand, expecting profits in the future, right? So to grow in the future, they might be in a heavy investment mode, which is why you might see a negative EPS, all right? So please get this right. Negative EPS often signals caution to investors but doesn't always mean that the company is failing. Right? Just because you see a negative EPS doesn't mean the company is going to shut down or the company is going to go bankrupt or no, it doesn't. That is not what it means. Okay, it's a temporary phase. It could be a temporary phase. All right. So it may just be in a heavy investment phase. Understood? Brilliant. So friends, with this, so with that, friends, we've come to the end of today's module. So if you have any questions, I kindly request you to type your questions in the comment box below, and I will gladly reply as quickly as possible. Okay? So friends, before I let you go, like always, we need to see what is going to be in our next module or in our next video, right? So from fundamentals, we are going to jump into technicals in our next video, and we are going to begin with pin bar candlestick, right? Pin bar, one of the most powerful candlestick pattern. It is called as pin bar, which we are going to learn in our next video. All right. So I thank you all for your time. Hope you all have a good day and God bless. Jai Hind.